All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, July 13th. So, theme of the day. Well, before we get to the theme of the day, risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything I'm going to be talking about is for education purposes only. So, yes, let me get to the theme of the day. Kind of a couple of reversals, right? And I would say tricky when that happens. So, first off, one of the data points that we talked about in the macro video this weekend was that we got one of the gauges of inflation. So we talked a little bit about this in yesterday's video too, and about that they were looking for something a little bit higher than normal, 0.5, and this actually came in hot, right? So we got 0.9. Now there was some. There was definitely, when you look into the report, you could see that I think a third of the report was driven by used car prices. A couple other things that you can maybe use the T word transitory, but bottom line, it's a higher than expected report, and you got a couple other things going on too. We had a Treasury auction today that didn't go great today, so you could see the reaction to bonds. They're basically right where we talked about last week that we thought was a logical place for them to hit some resistance, which was at this 200 period moving average in the long bond. Also, this coincided with a 1 hour VPOC being taken out to the upside. And what does this mean? Well, so you got yields moving up a little bit higher, but basically just back to where we were last week in terms of yields. But nevertheless, I know everybody seems to want to look for a reason when there's a little bit of volatility, but I would say this. I think, for me, and what I've been kind of saying is that these markets are kind of priced to perfection. We've been moving up here very nicely here in the S&P, as well as the Qs. Which again, we haven't lost any of the short term moving averages. So today, even though today felt a little bit nasty with the market going higher and then coming back, like I said, a reversal from a reversal. This is where we were pre-market, and usually, when we get something like this, and then a move back, you kind of feel a little bit of comfort by that. But we really started to slip. And a head fake, right? And this was right around this bond auction today at 1 o'clock, and a move back. So when I see stuff like this, and I know financial press media will try to really kind of give an idea for the day, but I just think that we've been seeing a lot of breadth divergences, and this market's been kind of priced to perfection. Over the last week. We saw that hiccup last Thursday, and the market came back. There's no reason why it can't come back tomorrow too. But I think we just have a lot of events piling up. We also have a PPI report out tomorrow, producer price index. We also have Powell speaking tomorrow, Wednesday and Thursday. So it makes sense to me for the markets to be a little bit jumpy, a little bit defensive, maybe some funds being a little bit defensive into that and taking advantage of the price action. And then, of course, we've got this, besides all of that, the economic reports and Powell, we're going to be getting into the heart of earnings season in about a week. So, to me, that's not a huge place to kind of press. So it is tough because, when we're moving up like this, we're seeing so many different movers move to the upside, but I do typically, and I got caught a little bit today with positions, even though I've been pretty responsible taking positions off, but I added an Amazon trade right at the absolute, wrong time for the day. But, this is what happens sometimes, is that you're going to see some reversal bars. Like this was, this was nasty. We did hit the top of value. It looked like the next leg might be ready for Amazon. And then we just basically sold off from where I added my trade, looking for next break higher. But hey, sometimes you get fooled, and this was the plan all along for me, was to basically watch this Amazon. I talked about it in yesterday's video, being at the point of control, and I said, hey, if we start to move in one direction, I'm probably either going to buy down here or I'm going to try to buy the breakout again. And so that just didn't work today. So that it is what it is. Sometimes you're going to have good trading days, and other days you're just you're going to be off a little bit based on what the price action is. And I think again under the circumstances, you could see what I did here. I'll bring up. Let me just hit pause on that. Yeah, so you could see the trades blotter, which I always show, good or bad. Normally it's pretty decent, but today was not good. I also, I had a little bit of FOMO with Tesla. Tesla, I heard, Goldman. Sorry, from yesterday, right? I was looking at Tesla yesterday, and I didn't take it, and I took some, right off the bat this morning. Goldman upped their numbers, so I thought it had a chance to basically take out this number up here, this version point of control, but it did not get up there. Now again, it didn't do anything really bad on the day in terms of breaking support, but this was what I was looking for, and since it wasn't doing it, I took off basically a lot of day trades that I had on that might have been names that I was going to hold for a little bit longer. But again, I think of this atmosphere, I would rather just, even if I have to take a couple trades off for losses, which is what I did today, so be it. It's just one trading day, and you just kind of have to move on. And I think right now, I don't want to press into into this type of atmosphere where we've got a lot of events this week, and specifically into earnings season. I really try to swing trade a bit less during earnings season. So I know it's tough. I'm in the trading room every day, all day, and sometimes I do feel like when there's not much edge, that it would be better served to be out of the trading room a little bit, maybe take a little bit of vacation time. And I think for the next couple weeks, I think a lot of names, like we talked about in yesterday's video, have run into the earnings report. So, I think this, again, I don't know if I will get it, but like I said in this weekend's macro video, I'm actually okay with a little bit of a pullback. You just have to kind of be ready for it in your positioning. Again, I never go down to complete zero positions or 100% cash because I don't think, like, I'm not one of these predictors of of a big sell-off. I just think that we've gotten a little bit ahead of ourselves. A little bit stretched to the upside. That's all. So I definitely keep some positions on, but I get a little bit more defensive. That's how I usually operate. Is just I do what's called make adjustments, right? And that's the three things that we talked about in this weekend's macro video were, hold a little bit less number of positions, a little bit smaller size, and I try to clear out of my short-term option risk unless it's like a call spread and I'm playing a catalyst event, which I do have a couple of them on for kind of pre-earnings moves. So that's it, guys. I would like to, I would tell you that there's other things that I'm really watching. There's been some option positioning in Twilio. I added a short-term call spread, in case this thing wants to get out of this consolidation and go up and take out this VPOC. Also a name that I've been watching that's seen a lot of option activity, medical device company. This is Edward Life Sciences. Nice little three candle pullback. Last time we saw this, we kind of turned and took another leg higher. So that's another one that I think is interesting here. I still think the semis are interesting. We talked about Taiwan semi up another 1%. From yesterday. Notice you got that VPOC up there, so you got a couple more days till this report's earnings. Right? I think it's the 15th after the close. So again, these names are going to just run into earnings, run into their earnings report. That's Taiwan Semi. I also like this ASML, which I've been talking about. A couple other names that I talked about in yesterday's video, which I even took this trade off. This one would have worked quite fine, which was Starbucks, has now come out to new highs for this one. Also McDonald's too, which is another name that I took off yesterday. If I left it on, I would have been able to hit a few targets in this one more. But again, I think it's just a little bit tough in here. So That's it for today's video. Again, just being a little bit more defensive, just reading the signs. Again, I'm not one that's going to say, oh, it was definitely like the bond auction or it was, the CPI report this morning. I think just a combination of things, and that, overall the market. If you look under the hood, we've been talking about market breadth for a while, but that hasn't been looking great, and that's been a divergence. So when you see these divergences in the market, I tend to get a little bit more defensive. Again, I don't go to 100% cash, but I make those adjustments that I just mentioned. All right, guys, have a great night. That's it for today's video, and I'll see you tomorrow.